Let's take a closer look at the tariffs then, because trade tensions flare as US President Donald Trump then slaps 25% tariffs on Mexico and Canada and 10% coming in on China, citing threats from illegal immigration as well as drugs. And the administration then had given the three nations time till February 1st on the condition that narcotics and illegal immigrants be stopped by the authorities. In fact, the order will now be coming into effect tomorrow. Remember that the country does annual trade worth $1.6 trillion with Canada, Mexico and China. So that's a very significant number. And Canada, of course, hits back with 25% tariffs coming in on $155 billion worth of goods when you're talking about US goods. While you do also have Mexico that has also retaliation, but also stayed vague when it comes to the kind of magnitude, the kind of quantum of the retaliation that they're talking about. Meanwhile, you do have the EU that is watching closely as Trump then hints at expanding the duties of countries pushed back. Let's also go across to my colleague Shinjoy then, who's standing by with more details.
Long before he became president, Donald Trump used to say that his favorite word in the English dictionary was the word tariff. So once he became president, it was only natural that there would be tariffs on imports into America. So Canada faces it, Mexico faces it, China faces it. Counter tariffs have come from the Canadian side, but China is the big issue because China is the elephant in the room in some ways. China's economy is 17 trillion, 4 times India's. Now, what can China do? What will China do? Because with a powerful economy, China can do quite a lot. Because China has a huge surplus of American dollars. And if it lets some of that into the market, it could drastically hit the American dollar. So we'll have to see what China does and how effective the Chinese reaction will be.
Right, looks like a global trade war is setting in, but at the same time, Canada, Mexico and China are hitting back at Trump's tariffs. Canada is imposing 25% duties on $155 billion worth of US goods, including beer, bourbon and household appliances. With Ontario pulling American alcohol from store shelves, Mexico promises retaliation but hasn't revealed specifics so far. While President Sheinbaum slams Trump's accusations, China, meanwhile, is taking the legal route, filing a WTO complaint and vowing countermeasures as well. As global trade tensions mount, consumers on both sides of the border could soon feel the pinch on this. In fact, let's listen into what exactly Canadian PMs made the announcement.
Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives.
All right, then that's the word coming in from the Canadian PM. But let's also take a closer look then at what brokerages then had to say and in terms of what they're penciling in when it comes to Trump's tariffs. In fact, we have Ashesha standing by with just that roundup.
Well, yes, first up, let's talk about Capital Economics, because they believe that this could perhaps be the first step in what could become a destructive trade war going forward. So some bold statements coming in from brokerage houses. They believe that tariffs could plunge both Canada as well as Mexico in recession in the second half of 2025. They do not expect any relief on these tariffs anytime soon, and that perhaps no deal could be signed for removal of tariffs that have been imposed currently. In fact, they believe more sectors could be added for exemption, and inflation, which has been a concern for the last several months, is likely to accelerate going forward. Capital Economics says the US inflation is likely to climb back above 3% mark this year, and any chance of higher interest rate cuts for 2025 have also died on account of these steps that US has taken. Canada, Mexico and China totally contribute about 43% of the total imports into US, and this of course is likely to have implications going forward. Nomura meanwhile while believes that tit for tat response is likely to escalate a trade war going forward. Non-US currencies have been depreciating for the last several months, and this is also likely to continue. They see a risk of more tariffs to other parts of the world, including Europe. Remember, as of now, only China, Mexico and Canada have been exposed to these tariffs, and this is likely to expand going forward into other countries of the world, including Europe. Markets, of course, will focus on inflation concerns and growth concerns going forward. So some bold statements coming in. Inflation is likely to take a knock on account of these measures that they have taken, and perhaps trade war concerns will escalate going forward on account of this.
Trade war could escalate, and even Nomura is talking about tit for tat response could escalate the dire situation. Thanks very much, Ashesha, for that brief coming in from what brokerages have to say on this. We stay for a